Welcome back to Take 10. Lisa Wiles, Fairway.
Corey Frills, also with Fairway. It's been a minute.
It's been a hot second.
Welcome back.
You know what? The reason we wanted to do a podcast today is because we have some really big information that I feel would best be explained by us.
Yep.
There's some big things happening out there. Corey, I'm going to go ahead and let you start because it is all about the market right now, is it not?
It is. So according to Mortgage News Daily, which tracks 30-year fixed interest rates, on Friday we had our best rates of 2025 at an average of 6.6% on the 30-year fixed.
Let's go.
Yeah, we're excited. We're writing pre-approval letters on Friday, and we're like, rates are the best they've been all year. Whoa, you're so lucky. Find a house on Saturday, Sunday, as one does. Monday, the markets open up, and we hopped to 6.8% on Monday, 6.82% yesterday, and today they're going to open even higher. Today's April 9th, Wednesday, April 9th. So,
and those rates will post probably a little after 11,
11,
typically.
12, right? So what in the world happened? And think about that as a buyer. As a buyer, I'm like, hey, we're at 6.6, woo. And then you find a house on Saturday, and then Monday I'm like, bad news, rates are now 6.8.
Quarter higher. What do you think about that?
Yeah, it's very difficult to build and maintain trust right now.
Right.
So that's what we're going to talk about. We're going to talk about what happened, why it happened, and what to do about it.
Yes.
All right.
Let's educate around it.
All right. So it's all about tariffs. Okay. I'm sure you're hearing this in the news. The Trump administration has put tariffs on almost all foreign countries we trade with. Mm-hmm. And that is doing a couple things. Its stock market does not like it.
Why would they?
Right. We think the goal is to support American businesses and American manufacturing. That's the goal from what we understand. But that results in higher prices, which consumers don't like. It's difficult, hard on the economy.
Can we also just, as a little bit of a throwback, that is higher prices, inflation.
That's right.
Right?
Yeah. So,
and we've talked about inflation before and how inflation affects rates.
That's right. Inflation has been a huge problem for the past 3 years.
Yes.
And so this is what you see. You typically see when the stock market sells off, has a bad day, you typically see money flow into bonds, which is what happened Thursday, Friday to push interest rates lower. Well, then other countries started putting their own retaliatory tariffs, and it's like the bond market shifted, and they're like, oh crap, this is inflationary. So you have upward pressure on interest rates via inflation, downward pressure on interest rates via fear in the stock market, and it's chaos.
Yes.
No one knows how to trade it
place.
right now. Like we were talking about this earlier, we haven't seen this since the early days of 2020. And even though we know from the result of that, rates went way lower, this is what it looked like early in 2020.
But Corey, why did they go lower when there was this kind of chaos in 2020 all around COVID? Why did they ultimately go lower?
That's a perfect segue, and the Federal Reserve stepped in, and I think that may happen here because this is a huge problem when you have these big swings in United States Treasury debt. At the low point, we were at 3.89 on a 10-year, and then today, as of 10:15, when I'm talking about this, we're at 4.38. So 50 basis points, 0.5% in swing in 3 days is not good for any stable economy. And so the Federal Reserve very well may step in. A theory that's floating around right now is that foreign sellers are selling United States debt. So a lot of countries, China is a major owner of United States debt. We believe that China may be selling debt, either being forced to support their currency or in retaliation, because that's a pretty good
move on their part.
It's a pretty good counterpunch. I wouldn't have thought of it, but now I'm like, that's pretty smart.
That makes sense.
Yeah. So it is chaos. Do I think the Fed will step in? Yesterday, I would have said no. Today, it's possible. This kind of wild swings in the debt markets is really, really dangerous. And I could see the Fed stepping in, buying bonds and forcing prices lower. Is that going to help our case for inflation or paying down the national debt? Probably not. So more will be seen. So let's talk about what are we going to do about it? What do we think is the best plan of action?
Oh, First of all, education. You got to understand what is happening.
That's right.
I also believe that when you are going out there to shop, you just need to reset and recalibrate. What does this payment look like again? What does that, look at the full payment before you go out and write a contract. I think that would be a very safe piece
That's
of,
right. That's right.
advice.
And if we, the really important part about that is if we know the house you're offering on and we can be in contact with you as the agent, or if you're a buyer, your agent, we can strategize the best way to make an offer on that house.
Because guess what? When the rates go up, who exits the market?
Buyers.
Oh, and now the sellers, do they have to work with the buyers they have?
They're going to have to figure it out. So we were talking about this earlier. Buyer demand swings dramatically based on times of the year, based on interest rates in the news. So you'll have a ton of buyers rush in when rates go down, and then you'll have them flee really quickly when rates go up. Listings kind of do this. They don't really, you don't have these huge swings in available inventory. It almost stays fixed. And so there's opportunities in both scenarios, right?
Yeah. Where's the opportunity when rates go up?
When rates go up, you've got sellers that are more willing to negotiate. And the best way to negotiate, I will forever believe this, unless maybe you're putting 50% down or more, is to negotiate seller pay closing costs.
Because what can you do when the seller pays your closing costs?
You can buy your interest rate down.
Whoa, you're back to where you were.
That's exactly right. So you can keep that payment to where it was last week.
Where you expected it to be.
Just by negotiating well, right? So there's equilibrium to be found in the market.
Strategically negotiating.
All you have to do is be smart about it and stay in contact with professionals that are going to take care of you.
Absolutely.
Yeah. So again, we don't think this is any cause for panic. I would like to make a public, please don't post about interest rates. Just don't ever. If they get better, don't post about it. If they get worse, don't post about it.
Oh, realtor friends, don't do it. It's just, it's too volatile. It doesn't appeal to anybody to know that the rates are going crazy right now because they may just come back tomorrow. And it's just, I think a better conversation over the phone with education around it.
Sure.
Let's not scare people to death out there for no reason.
That's right. Yeah.
I do believe also something that's important for you guys to know is the news that is reporting on these things, they are on a delay because there are other relevant things that they are reporting on that particular day. Rates are kind of a filler. So they may be 3 to 4 days behind, like, hey, rates dropped. Well, yeah, that was 4 days ago.
Yep.
And so don't believe what you see all the time on the news because, yes, that was a true statement. It was just in the past.
That's right. Yeah. Like, for example, the one they love to cite is the Freddie Mac Mortgage Market Survey. It runs a week behind. 1
week is forever.
Right now may as well be literally a year. Literally, we went from the low points of the year to the high point of the year in 3 days.
Yep.
So the data's old. But again,
and it's confusing.
There's huge opportunity in every market. When rates go up, buyers flee. You can negotiate more with the seller. When rates go down, buyers come in, and you have less negotiating power. So really, you just have to be a skilled sailor, as they say, right? Like soft seas never made a skilled sailor, right? So you just have to go with what the market gives you and make sure you're taking every advantage.
And we are here for you. If you guys have questions or you need us to look at a particular situation or I came up with like 3 things yesterday, little pockets where the rates did not go up.
Yep.
Found 3. So like the 15-year fix has held fairly steady through this whole thing. Yep. It's tried and true. The 15 is it's my solid friend right there.
Yep.
And some of those first-time homebuyer programs haven't reacted yet, and a lot of the portfolio programs haven't reacted yet. So we are finding little nuggets. We're being savvy on our side to continue assisting your clients and giving them the best possible scenario that we can come up with and smoothing out a rough market.
Yeah. And even, I will say even with the recent rise in rates, we're just at February levels. So February is a pretty strong month. Like we had a strong February.
We did. So it's all relative. Am I right?
It's all relative.
Don't get caught up in the hype.
That's right. Man, look at that. 8 seconds to spare.
All right. Hey,
did it.
Thank you guys for taking a moment with us. We hope that you're leaving this a little bit more informed. If you have any questions, reach out to us. We're here for it.
We work weekends. After
And
hours
nights.
at the ltwgroup.com, and we'll see you soon.